Dutch financial services company NN Group has reported full-year operating capital generation of up 8% on the year to 1.7 billion euros, although new business value dipped to 177 million euros in the second half. David Knibbe joins us, the CEO of NN Group. David, thank you very much for joining us. Just run us through the quarter that you've had.
Yes, good morning, everybody. Well, we had a very good half year. On a full year basis, our operating capital generation, which is our main metric, went up with 8%. On the full year, also our new business went up at 431 million for the full year. So commercial resilience was also strong. We saw net inflow in our pension business. So all in all, it was a strong year. Our solvency ended up at 197, which then also enabled us to offer a dividend. So an increase of dividend per share of 12%, and we announced a share buyback of 250 million. So all in all, a strong year for us.
So there are a couple of items here that are worth just pulling out. The negative numbers are the negative real estate revaluations, but also some impairment charges. To what extent will some of this roll on to the next half?
Right. So in the net result, we've seen some impairments. Obviously, financial markets have been very volatile. For the full year, the net result was 1.6 billion positive. But again, the main metric we're steering on is operating capital generation. I think for going forward, there's probably, clearly markets will remain volatile. We might see some more impairments in real estate. But there is also, I think, offsetting good news. I think, for example, the bank, we see the net interest rate margin we expect to further improve with attractive mortgage rates and savings rates going up a bit. The non-life business, we expect some growth, and also European business with the new business growth. So all in all, we have set a target of 1.8 billion capital generation going forward for 2025, and we're well on track to deliver that. But I'm sure there will be some volatility in the financial markets along the way. Yeah.
Well, David, congratulations on being reappointed by the board as well. We should mention that in passing. So it is a red letter day for you as you talk about the earnings. But on that new business, it's very interesting. Insurance companies can always write new business. The question is, can you write it profitably, and can you write it with better margin than the business you've written before? How does it look, given that inflation, no doubt, is having some impact?
Right. No, indeed, that's a very good question. And that's why we also report in what we call value new business. So this is really a margin metric and not a volume metric. So clearly, when rates go up, the discounting rate goes up, and that puts a bit of pressure in the short term on the margin of the products. There's currency effects. But all in all, what we see is we are very active in the protection space, and life protection, we see a strong underlying need. We've been talking for a long time about there's an underpenetration, but COVID has also made clear that people, when they were sitting at home and they were wondering what will happen to me, what will happen to my family if I get sick or something else happens. So we've seen an increased awareness in the need for protection products, and protection products tend to have a good margin. So overall, we continue to see good margins also going forward, despite that, obviously, with inflation, consumers are facing some purchasing power pressure. But the underlying need for protection is strong, and therefore we're convinced that we can continue to write attractive new business also going forward. And it's actually one of the main drivers of the growth in operating capital generation that we project for the coming years.
Yeah, and obviously the Dutch life business, as I think you're alluding to, is a strong engine for the group as a whole. But can you tell us a little bit about some of the international operations, just to give us a fuller picture on how the business is doing outside of the Netherlands?
Right. Yeah, so in the European businesses, as I was saying, the main focus is on growing the protection business. We have a very strong multi-distribution platform. For example, the banks that we cooperate with, we have seen that they've been selling less mortgages, less loans, and we sell credit insurance. So there we've seen that actually the sales went down. But I think the advantage of a multi-distribution platform is also that at the same time we see the tied agents, where we're really making significant investments in further digitalizing it, leads-driven type of agent channel. We've seen a very strong increase, so the agents were in a way able to offset some of the lower sales that we've seen from banking. And I think that's also the advantage that you have when you have a multi-distribution platform, that the channels will move differently over time. But overall, we see a strong development. We set a target for the European business of 450 million operating capital generation in 2025, and that shows also that we are very convinced that the European businesses will grow. Our Japan business also had a very good year in terms of value new business. So in constant currency, the value new business was around flat, which is very good in such a challenging year. For next year, we do expect some pressure there. We're in a transition, offering more protection products and more long-term savings products. So I think for the short term, we could see some pressure on sales in Japan. But also there, we set a target of 125 million in 2025, and we're well on track also for the Japanese business to deliver that.
David, there's been a big debate in markets around what type of landing we're going to have, given what central banks are doing to try to take demand out of the system. Just looking at some of your commentary today, first around the slowdown and the Dutch housing market, we pieced this together with some of the information we've had as we've kicked off 2023, that there was the first drop in house prices, in Dutch house prices in about 9 years. What type of slowdown do you think we're going to see in the housing market there? How sharp there's a reversal when it's been such a strong ride to the upside for so many years?
Right. Well, clearly, we've seen in the Dutch housing market, also during COVID, we've seen very significant increases of house prices. And, at that point, we still had low interest rates. So also the mortgage market was very active because we had refinancing and we had a lot of transactions. The expectation now is that we'll see a further slowdown of the number of transactions. So the refinancing, has really slowed down because obviously interest rates have gone up. So it's less attractive to refinance your mortgage. And the number of transactions is also expected to go down. Simply, there's not a lot of houses around in the Dutch market. There's still a relatively shortage of houses. Now, the shortage of houses also supports a bit the pricing of houses, but we do expect that house prices will go down a bit further. But keep in mind that the last few years they've also went significantly up. So the trend is probably a bit downward. In terms of quality of the mortgages, this is not a concern. The loan-to-value of our book is 55%, so there's very strict underwriting. So from the mortgage market perspective, this is not something we're concerned around. But we do expect some further decrease of house prices in the coming year.
David, we're going to wrap with you. Thanks so much for joining us this morning. We'll see you on another day. David Knibbe, the CEO of NN Group.